Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a midweek update for you for Bitcoin and, of course, a few of the other cryptocurrencies. And we'll take a quick peek at the stock market as well, since we've been doing a lot of that lately. Before I jump into the content, though, please do me a huge favor. Hit that thumbs up button on this video. Make sure you subscribe to the channel. And, of course, make sure you check the description for a link where you can join the Patron to get access to even more frequent updates. So the first thing that I want to talk about is going to be the stock market. We're going to be fairly quick with it. Basically, what we were watching, or what I was watching a few days back, was to see what happened when this pumped up to the 200-day moving average. And I mentioned that if it did pump, that it would be running into the 200-day moving average right about the time that it was running into resistance down here, which would have been this red line, not the green line, but the red line up here. And I know what you might be thinking, James, that's nowhere near that red line. It was. It was on the wick here, right? And then when it closed, it pulled back down. So I did exactly what I had expected it to do, what I had talked about, it doing before it happened. Obviously, it's put in this really nasty bull trap through this wick up above the 200-day moving average, got a lot of people excited, but then closed right underneath it, which is a textbook bearish retest until proven otherwise. There's no guarantee in trading, there never is, but this is about as textbook as it gets. Down, up, and then, like I talked about in the last video, the next target, if we do resume some type of downtrend, would be down toward the old support down around 23,000. And again, whether you are trading stocks or not, the reason this matters is because Bitcoin has shown this heavy correlation these last 3 months. And so if the stock market, and again, this isn't the stock market, this is the Dow Jones Industrial Average. There are obviously other stocks and other indexes as well, but this is just kind of what I use to measure the sentiment in the stock market. So if this does resume a downtrend, I would expect Bitcoin to move with it, not against it. Okay? Not going to talk about that a whole lot. It's a fairly simple concept. Right now, it looks like it has, started some type of downtrend, lower high, right? Lower low, because here's our old low back here. Here's our high. Lower low, lower high. If it is a downtrend, next up you normally have a lower low. Now if it throws a curveball and it suddenly starts going back up and it takes out this level here, and by take it out I mean it closes higher than this level, closes higher than 26,304, it could be that we're going to move a leg higher, that we'll take out this high back here next. So just a couple of things to watch for on the Dow Jones. So this is the 4-hour Bitcoin chart. This is actually the line of resistance I had drawn on Monday, so almost 3 days ago now, or I guess over 3 days ago. And at the time, RSI was sitting right about here, and I said what we'd want to watch for is what happened when price got up to this line. Could present a potential short opportunity, or if it broke through it and closed above it, could be a sign that it was going higher. So what actually happened was it moved up to it. It did move just above it, closed right above it, but it was more a fake out than anything else. Went right back underneath it, then had this little bearish retest right here where it just kissed the line perfectly. And of course, if you got short there, you got paid, right? Really simple stuff. A short position right there could have potentially netted somebody almost 3%. Not including leverage, of course. So what is happening now? Well, what I think is happening now, or what I think is really important to watch for, let's just look at price for a second and volume. Maybe you see it, maybe you don't. We have a left shoulder with really high sell volume. We have a head with lower sell volume, and now price has come down and kissed this left shoulder area again, creating a right shoulder with even less sell volume. This is indeed an inverse head and shoulders trying to form. I say trying to form because it has a neckline depending on how you draw it, some people are going to say there is a neckline right here. Other people would say that it has to go all the way up here. Me personally, I consider this the neckline because this was the left shoulder, right? We had the down, the up, the down, the up, the down. So if it breaks that line there, which is at 94.93, and it closes above it, to me, that's going to look bullish in nature, and I would start looking for an inverse target, meaning that I would measure this from the close down here to this line, which is about $392. So if we set that on top of this line, that's going to give us a breakout target of roughly, ballpark, about $98.87. So we'll call it $9,900. If I ask myself if that target makes sense, and again, first things first, it's got to close above this line. But if I ask myself, does that target make sense? Is there a reason that I want to look for $9,900? Yes, there is. Let's go to a daily chart. So if you look, right up there's 9,800. So right here is 9,900. So right in there, yeah, we could, that's not a gap, by the way. It looks like a gap the way I've drawn it. But what I'm saying is we go right in there and we could play around in this area of resistance, right? This kind of zone of liquidity, if you will. What we saw last time when price moved up there was a lot of people waiting to sell. So it's entirely possible that we go right back into this zone again, and then we'll know, probably pretty soon, whether or not there's a bunch of sellers waiting again to send it back down, or whether there's a whole bunch of people, a lack of sellers there where it's going to continue on up and take out this high back here. Okay. But again, we want to take it one step at a time. If we're looking at a 4-hour chart, first things first, it's got to go up and break that neckline, right? And I'm being generous. I'm being very generous to the bulls using this lower price point. There are those people who would be, within their right, or whatever you want to call it, to say, no, it has to go up and break this neckline first before it's confirmed. I think either way is fine. I think it's just whether or not you want to be conservative or whether you want to be a little bit more aggressive and go after it here. Okay. The reason I don't have a problem with people who would say I'm going to be aggressive is because the volume confirms this. It's not close. It's not close at all. Heavy sell volume. Much smaller sell volume, almost non-existent sell volume, right? So this does look like the sellers have been exhausted through here. And on top of that, you've got a long tail, and you have this little baby tail, right? Really does look like sellers are exhausted. So, if you were waiting for the day when I, was less bearish, right now I'm a little bit less bearish, right? Now, again, not talking macro picture here. I'm talking the smaller, zoomed in time frame, what might happen over the next couple of days. And also, remember, this also depends on what's happening in the stock market, because I personally believe that the stock market begins to falter or begins to tumble, that Bitcoin is going to have a rough time, okay? But as long as stocks are playing ball, I would consider this a valid inverse head and shoulders once that neckline is breached and price closes above it. All right. If we do look at some of these larger time frames, for example, the daily chart, put RSI back on there, take volume off so it's a little cleaner. Again, now we're starting to zoom out, talk about the bigger picture stuff. Not a lot's changed there. You had this trend line. Obviously, that trend line failed to hold up. It's still underneath that. Even if you were very generous and drew it like this, still underneath that. So unless you just really start, drawing a very biased line where you start drawing it like this uptrend has been broken, right? And you can see that on the candles themselves as well, right? Putting in these lower highs through here, okay? We've actually got a trend line that's starting to look something like that, right? If we look at RSI, same deal. We had this long running trend line that obviously we saw break, right? It looked like this. It did not hold up, but then we could draw a new trend line that looked like this, and we had the nice bounces off of it, and now it's retesting that line again. So the bearish scenario is this: if this cannot hold, if this cannot make that move up, if it breaks under this line and closes underneath this line on RSI, which this candle has almost 20 hours to go, then if it does close lower than that, I would expect it to, start moving down probably pretty quickly. Okay, we can start talking more about these old zones, these illiquid areas like down around 7,800 where we have this liquidity gap and even lower. All right. If we move over to a 3-day chart, so we've got all these old lines. For the most part, we're really not anywhere near those lines, so I'm not going to look at RSI right now. Just want to look at the structure itself and remind you that this is all fairly textbook stuff. This was all an uptrend, right? Higher highs, higher lows. Then we turned the corner. We put in this lower high, followed by a lower low, followed by a lower high. And so far, this candle that opened on June 17th, which was literally just about, a little over a day ago, about 28 hours ago, this needs to move up and close above this green candle. If it closes lower than 94.75, it's going to be yet another lower low, which is, at this point, you're going to say, yeah, this is definitely a downtrend. Okay. Doesn't mean it can't reverse course, but we are in a downtrend right now. So it needs to move up and it needs to close above 95.26, when this candle does close, which is going to be on the, depending on what time zone you're in, obviously, the new candle opens on June 20th. So we've got almost 2 days to see how this plays out on the 3-day chart. All right. As far as the altcoin picture goes, a lot of the alts have been popping lately versus Bitcoin, but they haven't really been doing that much in US dollar value, right? As far as fiat value, they've been staying fairly, steady, at least for the most part. But let's take a look here. This is a 3-day. Let's change this to a weekly. So to me, it still looks like we're inside of whether this is an ascending triangle or whether this is a parallel channel, or whether it's both. It's kind of tough to say, but we're essentially still respecting the same upward sloping trend line on Bitcoin dominance that we've been respecting since January of 2018, 2.5 years ago, right? So I'm still watching this with interest to see whether or not this bottom line is going to finally cave and give way, or whether or not we're going to move up and possibly break out of this, what looks to be an ascending triangle. And of course, this would be bearish for alts. If this was to break north, it would be bullish for alts if it was to break south. So if you're an altcoin fan, that's worth keeping an eye on. If we take a very quick look at the total market cap of alts without Bitcoin included, this looks like more bear market, right? This is one large bear market. If we put it on a monthly chart, it's much easier to see. It's just a series of, here's your high back here, your lower high, and your, I think you could look at this a couple different ways. Some people would say, hey, here's your lower high, and now we've got a higher high. Other people would say, no, this is still a lower high. We haven't taken out this high back here. I don't know, right? I think either way is fine. I tend to think this is probably a higher high than this, okay? So it looks like it's trying to turn the corner, but it seems to be struggling really badly. I'd feel much more confident if it did break this back here. But I don't think that it's a fair statement to say that, this wasn't a high, right? And what I mean by that is that this wasn't a higher high. This right here does look like it was a lower high, but this looks like a higher low to me, followed by a higher high. So it does look like it's trying to shift into an uptrend on the monthly time frame. Just not having a lot of luck, right? It seems to be really getting stuck there. So not ready to rule the altcoins out, but also not gambling for sure. Just patiently waiting, right? Most of the altcoins are still down 80 to 90% from where they were in 2017 and their peaks in 2018. And so I kind of look at it like this. I may not buy the bottom on these things if they start to go back up, but chances are I'm going to get a pretty good deal compared to where they were a few years ago. And if we really do enter a new bull market and these coins really do return to where they used to be, it doesn't require the bottom to do really well on that type of investment. So I am patiently waiting. Okay. On the smaller time frame, on this weekly time frame, looks much less promising. If we go back to June of 2019 and we can draw a trend line that looks something like this, right? Obviously that trend line, you know, being pretty well respected. You've got your high back here, you've got this lower peak right here, and then just yet another lower peak, okay? Now, that being said, in all fairness, draw this like this as well, right? And if we do, we're a little closer to it, so that might be the line worth watching. All right, this is a weekly chart. This is an uptrend, high, low, higher, high, higher, low, higher, high, higher, low, right? So technically on this little time frame from March until now, obviously we're still in an uptrend, but this week here is looking pretty weak. It needs to pump up and close above this level. Otherwise, it's going to put in a lower high, and you know, I may look at shifting some of my alt portfolio back to fiat. All right. So again, midweek update. So not going to go super deep on this stuff. Just wanted to give you guys a heads up. You know, obviously, I think it's important right now to keep an eye on this. You know, Dow Jones and the S&P 500 and the other index as well. I just don't want to get too deep into stocks in this channel. But I would keep an eye on this stuff just because of the heavy correlation with Bitcoin. And I would also be watching that 4-hour chart on Bitcoin, because this, you know, it is very promising if you're a bull. There is a lot of promise there that, hey, this could be an inverse head and shoulders. But just don't, you know, get too ahead of yourself, because a lot of times Bitcoin likes to throw up these fake outs, right, where it goes right up to it and then just goes the opposite direction. And that goes for inverse head and shoulders and also regular head and shoulders. All right. So with all that stuff being said, guys, please remember, I'm just some guy sitting in a spare bedroom. So nothing in the video is trade advice. Nothing in the video is financial advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And if you haven't already, please make sure to check the description for a link where you can join the Patron. That helps to support the channel. Also gives you access to more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.